Good morning, America. Hubert Johnson here with Taxes Made Easy. We've got some pretty hefty topics we're covering today, mainly inflation and interest. How is it hurting you, and how can you make it work better for your situation? And also, how does it affect resolving your taxes with the IRS? So, I work with people all the time and look at their financials. That's what we help people do, is help set up their things for a better resolution, their financial information for a better resolution, not only now in the IRS, but to handle the taxes long term. So again, there's a lot of news about this, and we're going to cover some macro news at first, but then really to kind of take a deep dive into how is inflation hurting or helping you in your personal budget and in working with the IRS and state taxes. So stay tuned. We'll be back right after this short break. Welcome back to Taxes Made Easy. We've got a lot to cover today, so I'm going to dive right into it. First thing I'm going to share is an IRS article. So this is from irs.gov. Again, warning about scams. If you got a big refund, be aware of this, especially if you got the advice from a sketchy tax preparer, or if you got it online. This is something, again, it's people who filed for these claims: fuel tax credit, sick and family leave credit, and household employment taxes. These are very narrow exceptions. And again, it's something that the IRS is seeing as they're processing more and more returns. So it gets into each of these credits and what you actually need to have to qualify for this. So someone says, hey, use this credit to claim a credit based on income earned as an employee instead of as a self-employed individual. Be careful. Talk to a credible CPA. If someone's getting crazy creative here to get a larger refund, they can be just creating a bigger issue for you down the road. So next article, and this is one I'm not sure. I don't know. I'm not sure how great this is. My personal thoughts are I like an approach where we use all of the above when it comes to producing energy. Now, Trump is saying that if he's elected president again, he would block Atlantic offshore's wind projects. And just not the one that to feature 157 turbines, but others as well. Now, well, again, wind and solar are not damage-free when it comes to the environment. So this is coming from an environmental perspective, but also a cost perspective. So again, we're throwing massive subsidies at these projects, but a lot of work has already gone into them. As you can see, some have already been built. And what I hate to see is massive shifts, from one side to the other. When Democrat is in power, they put all kinds of money in certain things, and there are things that should be ended and terminated. It's one of the big arguments here, which I don't know if this is just an excuse, but it says it destroys everything. It's the most expensive energy there is, but it is energy. They kill birds, they kill the whales. Now, this is probably the most, everybody likes the whales, but it goes on to talk about how there's only 340, I believe it's right whales still left in the wild. And again, it's been proven, there's a lot of scientific studies that show that offshore wind really, that because it creates a constant noise, spinning, that it really does mess with the whales. It separates the mother from the calf, and the calves tend to die once they get separated from their mother. And so it really is creating an environmental issue here. Um, but personally, the 157 windmill project is going to power $700,000 homes or 700,000 homes. Especially if we're going to go electric, we do need more energy. Um, Wind is 44% more expensive than coal and 144% cost to the nuclear power. But we're not building nuclear power anymore. It's the cheapest power there is, but we're not building nuclear power in the United States anymore. It's just a political hot potato that nobody's willing to touch. So I just want to touch on this article real quick. Do I think it's a good thing? I mean, we don't want to kill off the wells. We know wind farms do massive damage. But again, it's like one party saying we're going to go this direction, and as soon as their election, we're going to switch and do an about face and go the other direction. I don't see that productive long term. We have to get on the same page a little bit. Because if every 4 years we shut down all the oil and go straight for wind and solar, and then every 4 years every time there's a new president, we go do a complete about face, that kind of instability is crazy. So, I mean, if it needs to be shut down, fine, but I don't like the idea of just going and shutting down wind just to shut down wind because it's not favored by one political party. And the same thing happens on the other side. The Democrats go down as soon as Joe Biden came in office, started shutting down oil and gas projects all across the country, even natural gas, so very clean gas. And we've seen what's happened as a result. And increasing energy is one of the biggest drivers of inflation because it flows through the entire economy. So the next one, this is one that I shared from yesterday. This is a not so nice article from Oakspy. I'm not very familiar with Oakspy, but this is talking about Jared Bernstein, very well-known economist working in the Biden administration. And so some of his comments here, this is what's concerning. This is what I want to highlight. So monetary policy, and the idea is that the U.S. government can't go bankrupt because we can print our own money. So technically, yes, the government can continue to, this goes with modern monetary theory, and this is part of the excuse or reason that politicians and many liberals are using to just print money and spend money ad nauseum and pretend there's no consequences. So the old idiom, there's no free lunch, is very, very true and applies. It's been referred to as the invisible hand in market economies. And the thing, even in communist, controlled economies, you still have, the market will still move. It's just done underground. And again, like in communist Russia, they would have shortages on a regular basis. I was listening to a comedian shared a joke the other day, and he was told to come back in 20 years. It was a joke, but still, when you wanted a car, you couldn't just go buy a car. You had to wait for the factory to finally produce a car, and you had to get in line. And that was reality. So, but this idea that the government can endlessly print money without consequences is nuts. So this person is trying to interview him, and yes, it's kind of a gotcha interview, but he said, they print the dollar, so why does the government even borrow? So why don't we just listen to this real quick? It's short.
Like you said, they print the dollar, so why does the government even borrow?
Well, again, some of this stuff gets, some of the language some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, yeah,
Yeah, that's where it starts cutting and getting moved. And one of the criticisms of this video that it was edited. That first part wasn't was one clip, but again, this idea that we can just print money ad nauseum, no concerns, I think is very damaging. So another proponent of this is Paul Krugman, who has argued at length that running deficits or government overspending is not the problem. It's not something that we have to be worried about. And he's in the news because he took a big swipe at former President Trump. And the media is just unleashed on him, mainly because he's claimed, he's claimed many times that there was wasn't a lot of inflation. So 6 months ago, he claimed the war on inflation is over. We won at very little cost. So some of the things that he's been arguing for, and he's a Nobel economist, so he won the Nobel Prize. But if you take the way they measure inflation and you exclude most, housing, energy, so including gas, you exclude food, inflation isn't that high. But it's not a problem if you don't buy anything. And so again, I don't want to really tear into why, and I didn't share this tab. The whole argument, it's kind of a tit for tat here. But again, here's another economist, very well known, Paul Krugman, economist today, very wrong in inflation. So let's look at the flip side of the coin. And I would say he's wrong because inflation isn't over. The cost of housing is continuing to go up. People are struggling today more than ever. I'm not seeing a turnaround. I'm seeing people struggling day in and day out. And this is why I want to talk about how interest and inflation hurts individuals and how you can get ahead of this and use this for your advantage. So I don't know if this is a success story yet. This is Argentina's Javier Milei. Again, gets more economic news about Argentina. Now, Argentina is an example of the extreme. Some of these numbers are nuts, and we are coming up on a break, so I might have to really dive into this. Yeah, I'll have to dive into this when we come back after this next break. Welcome back, everybody. And so we're going to jump into a little bit about Argentina as kind of it is an extreme example of where things can go if you have constant overspending and you just blow the roof off of overspending and inflation. So again, this guy was considered a lunatic. He carried chainsaws to, was like, this is what I'm going to do to the government, take a chainsaw to it. Brought chainsaws to political rallies, claimed to right the ship. And again, when he was elected, they had 300% inflation, which is unmanageable. It's just absolutely. Think of Germany under the Weimar Republic, which did the same thing. They tried to print money to get themselves out of the situation. We've seen examples of where governments have just printed money like mad and overspent to try to inflate their way out of a horrible situation. And that's where Germans had to carry wheelbarrows full of money to buy a loaf of bread. It just became absolutely useless. And who did it hurt the most? The German people. Helped destroy their economy and create a situation where someone like Hitler could come in. and convince people, hey, I'm better than these guys, which again, economically he was in the short term, but then he absolutely destroyed Germany and left it a smoking ruin. So here in Argentina, they had 300% inflation, 40% of the people in poverty. So absolutely horrific. So they went with Milei, so kind of a Trump-like candidate. I think he's his own kind of candidate. And he has cut the inflation from 300% down to 11%. Now we look at 11% and we think, oh my goodness, 11% official inflation, we'd be nuts. We're probably close to that. Right now, if you don't pull out, the way they play the numbers by eliminating the things that are going up the fastest, we're probably at 11% inflation. And so the government produced a modest surplus. Modest surplus is really 0.2% of GDP. So very, very tiny surplus, but it's the first time since 2008, and Argentina with their crazy politics have run deficits for 113 of 123 years. Now, we're not much better. I mean, the years that we've actually had surpluses are very few. But the reserve, their central bank, which Milei wants to cut, they still have rates at 50%. Our Fed rate is at 5.25%. So just to kind of give you perspective here, things are still nuts in Argentina. They've made some huge, massive progress, but how they've done it, he's been ruthless. And in our government, I don't think the president has enough power to go and do what he did. Closed whole government departments overnight, does not have the authority to do that. Axed entire ministries, anti-discrimination agency, state-owned news service. And then last month he said, I'm going to fire another 70,000 state employees. Why are we destroying our economy by having a bloated government? Governments don't create anything, they just spend money. That's by and large mainly true. And they don't do it very efficiently. So really there's a few options here. You can cut gradually, which is what we've always been arguing for. The problem is Congress and the president always, when they do some cuts, they always spend more elsewhere. So that's been our talking point. But instead, he's taken a chainsaw to the state, yielding huge savings, and taking things and drastically changing a lot of the laws. Now, if he has that power, let's watch and see what happens. They've seen huge changes here, but again, that 50% federal interest rate is still nuts, and so this is Jamie Dimon, who's a JPMorgan Chase CEO, Jamie Dimon, talking about deficits. And so he's saying we're not where Argentina is, that has a 50% federal rate, but we're getting there. He's like, we're kicking the can down the road. It used to be pre-COVID, we used to have a 1% national deficit. Now it's at 6%. So that can drive growth, but at the same time, there's only so far you can go down that road without causing massive damage. This is from CNBC, and this guy is not a Trumpite. He's definitely not a fan of Trump, and he points out that the federal government already has so far spent $855 billion more than it's collected, and this is the first 4 months of the year. Not counting May, because those numbers haven't even come in. So that's on track to have a deficit over $2 billion for this year, for 2024, or $2 trillion. Last year, the deficit came at $1.7 trillion. We're on track to go much higher than that. Again, a lot of the same news we've talked about, how the deficit has gone on for quite some time. So here's something that he says. This guy is not. He's asked, would you serve in the Trump administration to support Trump? His response is absolutely not. But he says we need to come across the aisle and find some common sense solutions. That he's been kind of right on NATO, immigration, and China. Biden's now adopting what Trump was saying. They're starting to issue tariffs on Chinese goods, where they're trying to hurt our economy. And I think part of this, we've become so partisan and vitriolic in how we treat each other that we're not willing to listen to each other. So this is coming from CNBC, which is interesting. Got another quick article from CNBC talking about why is inflation still really sticking around. And the problem is, the more the government does, the more they mess up. And again, we talk about our government. Here you had Neil Kashkari, who's in Minneapolis. He's a Fed official in Minneapolis, I believe. Said we might have another rate hike. Everybody's hoping for rate cuts, but with inflation continuing to come, it's not going to be a good thing. And as they continue to run budget deficits, now last year was 6%. Now it's going to be roughly 7% of GDP. The more the Fed rate hikes rates, and then the worse the deficit gets because we're paying higher interest payments. So our own Fed is raising rates, but it's also driving more payments. But you've got to address the inflation. That's the thing. So that's the biggest thing that's happening in our economy. So again, it goes on to talk about how inflation it's a vicious loop affecting this, in that we're paying more now on inflation than any other single item, more than defense, more than Social Security, and again, it's becoming a real problem. So very quickly, just wanted to touch on a Forbes article. Follow this link. When we post the show, follow this link. This is a great link. Forbes.com, average credit card interest rate. And it's the same for today. Average rate is 27.65%. So now we're going to be jumping more into some personal issues and how this affects individuals personally. And then it has some featured cards, incoming rates, and the type of card matters. Credit score matters a lot. But even super prime, the best, paying between 16 and 18% interest rates, which is pretty, that's high. And if you're in the subprime, it's just you're getting killed on interest rates. So and again, just real quickly, it says depending on what interest rate you are, if you take out $7,500, you're still paying. Here you're paying double over time if you pay the minimum payment. Here you're paying twice as much. So you're paying, you've got to pay back the $7,500, but you're paying over 200% interest over time. Here you're paying 100% interest over time, 88 months to pay off. It takes 37 months with a 27% interest rate, and you're paying twice as much of what you actually borrowed. So again, and so there's some quick suggestions how to lower interest rates. So there's so many ways that it can hurt you and hurt individuals. And when I look at people's finances day in and day out, these are the ways that I see that it hurts people. And this is why I talk about inflation, interest rates, and because it hurts their personal finances. We just end up talking about credit card debt. Credit card debt is one of the worst. If used correctly, credit cards can definitely help you. They can be useful, but number one thing is don't carry a balance. Do not carry a balance, or use it only for emergencies. Pay it off as soon as you can. Some of the common mistakes I see with credit cards, excuse me, that people will use it for emergencies, dental visits, hospital bills. If they have repairs that need to be done to their home, and they'll put it on a credit card rather than paying it directly. So I see this all the time where they'll go and they'll take, they owe $10,000 and they'll stick it on a credit card. When you're dealing with the IRS, if you are paying the hospital directly and you're paying them $100 a month, $500 a month on this big hospital bill, whatever you're paying, you'll get full credit for it. It's considered a necessary, reasonable expense. The moment you put that on a credit card, though, just think of it this way. The IRS doesn't care at all about Visa, MasterCard, Discover, American Express. Those are all unsecured debts. You become liable for them. They can become a burden on you. But at the same time, tax debt has higher priority than credit card debt. And this is the same for the states. So if you have some of these bills, don't put it on a credit card. Pay it over time, and especially if you have tax issues, and you can get credit for those payments. If you're paying a hospital directly, if you're paying off, for home improvements, if you get a HELOC, or if you go and if you have a car that's paid off and you go get a loan, go to your credit union, local credit union. Don't go to one of these title loan companies because they're rapacious. They're horrible. But get a reasonable loan, and that way it's a secured debt, and the IRS and states will give you full credit for those payments. You can borrow from family, but if you use a vehicle as collateral, or you use an item as collateral, they will give you credit for those loans to family members as long as there's some kind of collateral. So you draw up a simple agreement. It's not that hard to do. You just get online, and you sell a vehicle to them or something, and you pay them monthly. As long as they can see those monthly payments and they can see some kind of agreement, the more formal, the better. Where you're transferring a vehicle, or you're taking a loan out and the vehicle is being used as collateral, they'll accept that. Like I said, try to formalize it somehow to an actual promissory deed or something like that, or promissory note that is legally enforceable, and they will give you credit for that. But the IRS treats credit card debt as absolutely unimportant. They ignore it, and people are usually, unfortunately today, they're paying out the nose for it. Payments on credit card debt. So if you go to reconsolidate or consolidate all your credit card debt, and you go to the company that helps negotiate on credit card debt, and you're paying $500, $750 a month for that every single month, the IRS won't give you credit for it because it's taking care of unsecured debt. Now, the exception to this rule is where it becomes secured debt. And how does it become secured? If they go and get a judgment. So normally, why would someone want a judgment against them? Because if you go and get a judgment against them, this credit card debt doesn't go away. Well, it does become unenforceable after 7 years, but you can file bankruptcy on it. But if you really want to pay off your credit card debt, tell them go get a judgment, and then you can pay them in full and get credit for it with the IRS. So the way the IRS treats it is if you're making $5,000 a month, and your allowable expenses that they'll accept are $4,500, but you're paying $750 a month on credit card bills. The IRS will say, "Oh, don't pay your credit cards. You need to pay us that $500." So either you default on your credit cards, and pay the IRS, or if they go and get a judgment, all of a sudden now it becomes an allowable expense and you don't have to pay the IRS anything for now. Now, it varies with the states. Some states have hardship programs, some don't. California does, New York does, and it really depends on the state. Arizona doesn't. So it's a very tough situation here if you just don't have any money to pay. You've got to balance which ones are more important. Some of them are going to go to default. So first suggestion, don't dig yourself a hole with medical, with improving your home, other things. Credit card debt is a vicious trap. Just think of it that way. It's a very vicious trap. And the best way to avoid it is to never put money on a credit card. Always pay off your balance every single month religiously. But if you do get in that situation where you do have some credit card debt, one thing you have to watch for is when people get some money, like, okay, I have a little bit of money, now I can address that. That's not the best time to address. The best time to address the IRS is when you don't have any money. Then you can do an offer in compromise. You can do a hardship status. I mean, if you qualify, you can do an offer in compromise. And some states will do offers as well, offer in compromises as well, to settle the balance for much less than the original amount. We do offers on a regular basis. We get them accepted on a regular basis. Just word-wise, don't assume you're going to qualify. The IRS, especially under the current administration, has made it harder than ever to qualify for an offer in compromise, and they've made the process harder than ever. So be very mindful of that. I would never ever rack up tax debt and think, oh, I can just settle it. Don't assume that. Some of the other issues I mentioned, personal loans, bank loans. If they're unsecured, the IRS treats them just like credit card debt. Paying family members back. Unless you have an agreement and there's some kind of collateral, if you are purchasing a car from your parents or something like that, and you have an actual agreement, a promissory note in place, they'll give you credit for that. But 9 times out of 10, paying money on promissory notes or family loans, personal loans, rather than paying the IRS is a huge red flag to them. And we're going to talk about how that's treated when you're considering doing an offer, an installment agreement. That can create more problems than it solves. But we're coming up on another break, and we'll dive into that when we come back. Welcome back. Thank you for continuing to watch Taxes Made Easy, live or on rebroadcast. And we're focusing on how interest rates and can definitely hurt you, and what are the biggest causes of interest rates tearing into people's personal budgets and how that affects taxes. So we were talking about paying personal loans to family or friends, paying off credit card debts, other unsecured loans. Those are the biggest examples of those. But be very careful when you do get some funds and you have tax debt. People think, hey, I'll just pay this off, pay my family off, and then I can deal with the IRS. Don't do that. The IRS looks at it as if you're paying off family and friends. Trust me, there's been so many bad actors that the IRS is very much onto this. So what happens is if you pay a family member $10,000 to pay off a loan, doesn't matter how legitimate the loan was, unless there's a promissory note or something like that, the IRS could even have an issue with that. They want you to pay the taxes before you pay off family members, because family members can wait unless you have a solid business arrangement. And to pay off them and lump sums like that looks really bad. What they typically do, and this can matter for an installment agreement, but especially for if you want to do an offer in compromise, they can say, look, you had this money. You could have paid us, but you didn't. You went on vacation, you You went and spent money here and there. Now, can you use those funds for allowable expenses? Absolutely. Medical care, necessary house repairs. You can absolutely use that for necessary items. But here's the key thing. You should be using a tax professional if you're going to do an offer and compromise. Unless you have, if you have any issues like this, if you have money that you're going to spend down first before going into an offer, and there's plenty of ways to do it right. But what kills me is when people do it incorrectly, and then they come to us and say, "Well, what can we do now that we've done it?" And I said, "Well, nothing. You've already blown up your chances for an offer. You have to wait 4 to 5 years till that issue becomes too old. It's a problem, and you can't just jump over it. So get some advice. If you're not getting the advice you need from the tax professional that you are using, or you don't, or if you're getting billed by every single call, call around. Get a second opinion. Get someone that will give you information and guide you through the process. That's what you really need, is someone that will guide you through the process. So be very careful about paying off large chunks of personal debt, credit card debt, and be very, very careful about using credit card payments to pay off medical bills, dental bills, even state taxes. I had someone that, and I mentioned this before, they put down, I think it was $7,000 to the state and $10,000 to the IRS. And they qualified for an offer and compromise, but now they have this credit card debt. The IRS says, "Well, thank you for the payment." She could have settled the whole amount with the IRS. She could have used the state amount as an allowable expense to help her get a better offer with the IRS. But because she had already put it on a credit card, now she has this huge credit card bill to deal with. Not going to get credit. She's not going to get credit for the monthly payments. And she just shot herself in the foot in multiple ways. So get that advice early. So one of the last things I want to talk to you about as far as interest rate, and this is something that can definitely hurt individuals, are vehicle loans. Now, in the IRS's mind, the IRS does not always reward prudent financial investing or planning. The best vehicle to own is a paid one, one that's paid for, hands down. If you talk to anybody with the budget, anybody that's helping people have maximize their income and their purchasing power, having monthly payments on a vehicle is not the way to go in most cases. Having a paid for vehicle is. Now the problem with that is that the IRS doesn't always reward good financial planning. So if you have equity in the vehicle, they're going to add that to your situation. Whatever equity that might be added to your offer and compromise might be outweighed by the interest that you're paying over time if you have a bad loan. So, and you have to pay higher insurance rates if you have to have full coverage on your vehicle. So again, there's a lot of things to weigh back and forth. I don't know why my phone is just going off the hook. You can use vehicle loans. So let's say we mentioned if you have a vehicle and it's paid in full, you can go, and I recommend going and getting a good loan through a reputable credit union, ideally someone you already have a relationship with, and getting you can take out a short-term loan at favorable interest rates, and that gets rid of the equity, and then you have to use that money for an allowable expense. So there's ways to plan it out so you can get a favorable loan where you're not getting killed with interest on that. But you don't want to rob Peter to pay Paul and hurt yourself in the process. So there are ways to do it. Some of the worst things you can do for yourself is go out and buy a brand new vehicle with a really high payment. The IRS only allows, I think it's around 610. I'd have to pull up the exact number, but they only allow for a car payment around $600. If you're paying more than that, if you have an $800 a month car payment, doesn't matter if you have a family of 6 and you go get a huge Suburban for your family, they're not going to give you credit for what you're spending over that allowable amount. They deem it a luxury vehicle. Like I said, most allowables have not kept up with the real price of vehicles today. And anything you spend over that amount, you're just not going to get credit for it. The states, you can, as long as it's within reason. So that is a key difference between IRS and states. So before you make these decisions, if you have tax debt, sit down with the tax professional. What kind of vehicle should I get? How is this going to help me, hurt me with the state or IRS taxes? And how can I best plan for the best result here? Now, if you're doing an offer of compromise, you don't have to worry about all the interest piling on, all the interest and penalties. The states, absolutely, because their interest and penalties don't go away, and most of them don't have a good offer plan. New York is one of the exceptions. Now, I say that, but New York, it's not easy to get an offer through New York. You have to qualify, but again, they have the best program and they're the most responsive when it comes to their offers. And we get more accepted through New York than any other state. So what are the total penalties and fees when it comes to the IRS? So if you have a tax debt in 23 and you filed for an extension, but you haven't filed your taxes yet, if you don't pay that tax, let's say you owe $10,000, the penalties and fees add up to 47.25% over time. So if you get that tax debt and you just let it sit and you let it sit, eventually that will go up to 47.25% plus 8% annually. So that's 55.25%. If you have it, and now, moving forward for 24, they're going to hit you with the 8% for the year that you're in. So it's a pay-as-you-go system. It's a misnomer that people think that you don't have to pay until April 15th. They're going to charge you the same rate of interest for the whole year that you were in if you don't make any payments in. So you get hit for 8% penalty in the year you're in, and then every year thereafter based on the interest rate. Now, if inflation continues to go up, if it continues to be a problem, it's possible now, and they're actually mentioning, hey, we actually might have to raise interest rates. And that's just going to hurt people who make more money, more expensive throughout the economy. But again, they're trying to do something about, and they're probably very aware of what real inflation is. So, number one piece of advice I give people: make sure you're not going to owe for the current year. If you've already had the interest and penalties assessed for prior years, fine, it's done. Ongoing, it's only 8% moving forward. What you want to avoid is on new tax debt, pay it off, try to eliminate those penalties and interest before they accrue. For failure to file, it's 4.5% every month until it hits 25%. That comes pretty quickly. For failure to pay, it's 0.5% or 1%, depending on if you're in collections or not, until it hits a combined interest rate of or penalty rate of 47.25% between failure to pay and failure to file. Those are the two worst ones. There are other penalties out there. This is not an exhaustive list of all the penalties. These are just the main ones. So this is why people look at it and say, I'm paying almost double in taxes over time. Yeah. So the number one thing you need to do is to stop digging the hole. Change your current situation so you're not going to owe moving forward. And sometimes that's really tough and it hurts. But the IRS will give you full credit and help you qualify for a better plan by paying more in taxes now, so you're not going to owe moving forward, and it gets you a better resolution with the IRS. The IRS would rather you not owe for 2024 and moving forward than you pay your past due taxes. They'll ask for it, but you can get put in a hardship status, you can do an offer in compromise, or do a very low installment agreement, depending on what your financials show. But again, even if you have plenty of money, you're making $10,000, $20,000 a month, you're still getting hurt every year that you owe, and the penalties and interests are very, very high, much higher than many credit cards. Do I recommend paying off taxes with credit cards? In most cases, no. But in the short term, it might, if you can pay down your credit cards, it might make sense to avoid some of these penalties and fees. I want to switch gears a little bit. In the beginning, we talked about, mentioned Mr. Bernstein, Paul Krugman, and I just want to touch on Milton Friedman real quick. So there's two main economists, two main veins of thought. John Maynard Keynes, who is pretty much a big government theorist and economist, and pretty much put a lot of the economic theories in place that Carter used in his administration. And we all know how that turned out. Friedman is more open markets. Ronald Reagan more adopted his philosophy. And it's important to be informed. Read about both of them and see what makes sense to you. I just came across this. Just want to finish up with this little tidbit. 25 best quotes from Milton Friedman. I'm just going to mention a couple of them. Inflation is taxation without legislation. And some of these are a little more complicated. I'm going to hit on a couple of short ones. There's nothing as permanent as a temporary government program. And I'm in favor of cutting taxes under any circumstances and for any excuse, for any reason, whenever it's possible. It might be a little extreme, but again, this kind of drives where his theories come from and what his overall thought pattern. Most economic fallacies derive from the tendency to assume that there is a fixed economic pie and that one party can gain only at the expense of another. So the idea is that if we tax the rich and take more from the rich, that's going to help everybody else. That's a huge problem. When you tax the rich, where do they get their money from? They pull it out of their companies, pull it out of their investments, and then people end up with less money overall. It hurts the economy, it hurts everybody. The government solution to a problem is usually as bad as the problem. Again, very one-sided, pessimistic. It's kind of funny though. If you put the federal government in charge of the Sahara Desert in 5 years, there'd be a shortage of sand. So again, these are kind of funny, meant to be funny, but at the same time, inflation is always and everywhere a monetary phenomena, but it's very real. So the idea that we can spend without consequences as a nation, but also personally, is very destructive. And the fact that you have people like Mr. Bernstein and Paul Krugman pushing these policies, I think it's very important that people understand at least the basic idea. Why are they saying this? Where are they basing these ideas off of? And do they make sense? Or do we need someone like in Argentina taking a chainsaw to our federal government? And it's not as easy. They have to work with Congress here. I mean, the president or the executive doesn't wield as much power here as they do in Argentina, as far as having to have to work with the other branches of government. But on a national level, but also on your personal financial level, let's get your finances in place. Let's get your case together so that taxes can be made easy and to put you in a better place moving forward for you and your family, and that's our goal. Give us a call if you have any questions, and I hope you have a great day.